freedom isn't the result of wealth, it's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
Happy birthday, America, and welcome to the Wealth Independence Podcast, where freedom leads and real wealth follows. As always, I'm Dustin Bailey, and I'm here with Adam Penn. Adam, happy 4th of July, my friend.
Happy 4th of July. Are you happy I came up with this idea to do a American-themed episode?
Absolutely. So, when I was planning some stuff out, I saw that, we typically publish on Fridays, and with 4th of July falls on a Friday. So, what more appropriate than a very independence-themed episode, right? It's in our name. I feel like we kind of had to do that. I like your suspenders, though. It's very nice.
It's a tradition. I don't normally wear a shirt with it, but I felt like for the podcast, I should wear a shirt.
That's, you'd fit in very well here in East Tennessee. I'll just think there's a lot of similarities between the very, very northern California and East Tennessee.
Very, very rural Eastern Tennessee.
Yes.
Yeah. I used to shave my mustache and my whole beard and have just like a mustache down with like all the way down. And that me and all my friends would do it, or like three of us would do it on every 4th of July. And we'd wear the same American flag suspenders. We all had matching set. And we would wear those for the whole day. And normally we'd all be sunburned. And
So what you got planned for today?
Gonna go floating down the Sacramento River.
Nice. That's
nice and hot here in
fun.
Chico. So floating down the Sac is kind of a go-to when it's hot. I used to always call out of work or just skip out on work when I had a W-2 job. And if it was over 100, I would just, by like noon, we'd go to the river and then we'd float. We'd put one car at the bottom, another car at the top, and we'd float down the river.
That actually sounds very relaxing.
It's fun. We tie all the rafts together and then we put an ice chest in the middle and
Exciting stuff here on the 4th of July. Again, happy birthday, America. So my idea for this episode was hopefully pretty quick here. We won't take much of your time and know that most of our listeners would rather be
people are still listening at this point?
Yes, exactly. Or maybe they're just hungover on July the 5th and listening to this because they need something to do to kill the time. My thought, and I have to admit, we use AI a lot. Adam and I both do, and basically every day of our lives. And I had the idea for an independence-themed episode, and I asked Claude, I'm like, what are some angles we can take? And it came up with this idea of red, white, and cash flow, which I absolutely love. But this idea of course, it's Independence Day. We're celebrating the day that we declared independence from Britain, and so the idea I had here was like, talking about breaking free from financial dependence. So if you're not financially independent, or you would like to be further increase your independence, I think this is kind of a quick framework for three things. There's sort of this 3-step framework for how you can do that. And so I think the first step would just be figuring out what you're breaking away from, right? And I think for most people that's pretty easy to sort out, whatever's making you unhappy or something, a risk you're concerned about. So maybe that's a single income source if it's just your job, or maybe income from a business, and that if that were to go away, then you kind of got problems. Maybe it's stock market only investments, and so you're exposed to a lot of volatility and some things there. Maybe it's just the idea of working until you're 65 years old. It's like, okay, I definitely want to break free from that.
Something I heard a while back, which was interesting, because we're both entrepreneurial and we're building businesses and building multiple cash flow streams. I'm sure we'll dive into that, but I think it was one something I saw on Instagram, and it was essentially like, my backup plan is your primary plan. Like, my backup plan is I have to work a job till I'm 65, right? And that's most people's like best case scenario. Yeah, my backup plan is your best case scenario, right? So it is funny how there's different options that people can take, but I think that taking those first steps to really become more independent, especially with the freedoms we are given in this country to be able to go do that, I think there's a lot of value in it. Even this morning, we were doing distributions for a deal that Dustin and I invested in, and just another check you get, and I was like, oh, cool, $1,000, not bad.
it's a reminder when those checks come in about the power of that and the power of what that does. So again, like that whether it's a single income source and I think Adam, that's actually a pretty good lead in to kind of step two, which is so step one is what you're breaking away from, and step two is what you're moving towards. And so multiple income streams, I think, is something especially anybody that's investing, that's tends to be a general goal, right? You don't just want one income stream, but
I think that's one of the benefits of syndications, right? Is that you're not tied to a single income stream. So I was talking to someone earlier about an apartment that we have, and they said, well, or they were looking to invest in another one or go buy something, right? So they could go buy a fourplex for like $250,000 cash down payment, or they could go do 2 or 3 syndications, and then they're diversified and they don't have to manage it as much, right? So I think there's that power of fractional ownership, which really is what a syndication is, or even our credit fund that has multiple assets in it.
No, and that's a good point. That's even a way to get multiple income streams if you're looking at how to deploy and how to allocate capital that you have. There's multiple ways to look at that and to look at a pile of cash and think, okay, can this work for me in multiple ways? But I think another thing to move towards are cash flowing assets. We talk to folks a lot of times that have the vast majority of their wealth, or at least their investable wealth, in the stock market, and following that traditional plan and watching equity grow, but there's no cash flow from that. And so, of course, what are you smiling at? What
I'm just
what
thinking.
I'm going to say? You can't eat equity, Adam.
I'm just thinking, like, there's so many people that spend the majority of their life just trying to put away. I mean, a good income is $100,000 right now. I'd say that's arguably a good income, $100,000 to $150,000 a year.
Live, but yeah,
it depends on where you live. But $100,000 to $150,000 is definitely livable. And if you look at that and you say, well, I want to save $1 million, you would need let's just say you could live off of 50,000, which is super low, way below your means. It's still 10 years to get to where you're trying to go, and there's no cash flow on an interim, right? And it's all equity that could fluctuate. So it's just funny to me that if you could do that 1 year, buy a single family home with $100,000 down, and 30 years from now probably have half of that $1 million, right? Like I don't know. I'm smiling just because that idea seems ridiculous to me, I think, is why I'm smiling.
I agree. Oh, we definitely like cash flow. Again, red, white, and cash flow. But yeah, I mean, I think that's an excellent thing to move towards, and I think that's a paradigm shift for a lot of people to think I'm not just going to invest in or throw my money at something and the idea is number go up over a long period of time. It's like, no, I'm going to buy a specific thing that is going to turn around and send me cash every month or every quarter, and that's a very different paradigm, and that enables a lot of freedom. We've talked to a lot of folks who have on this podcast so far who have said some variation of that, and some way that what freedom means to them is almost always not watching a brokerage account go up. It's enabled by cash flow. So definitely think that's a strong thing to move towards. And another thing that came to mind here is just time freedom, right? So regardless of what the exact amount is, or even like lifestyle, even if it's just I want to have the ability to know that my expenses are covered, and if I want to walk away from a job or want to become work optional or whatever, like I've got the flexibility with time. And so that's a huge goal. And definitely think that's a very worthwhile thing to say, okay, this is where I'm setting my sights. And then, so step one, what you're breaking away from. Step two, what you're moving towards, and then step three would be the action plan to get there. And so we've kind of touched on some things there. I mean, there's so many different ways to go about this. You could pick an income target and say, well, I want $10,000 a month of passive cash flow. And then you can start to reverse engineer from that. Okay, based on what I know I can earn in certain types of investments, how much do I need to have invested in order to get that? I think picking a handful of asset classes to start out, whether that's multifamily, if it's private credit, if it's oil and gas, just whatever. But again, aligning with, okay, here's my target. Here's definitely, again, in step two, what you're moving towards. What are going to be the investment vehicles that are actually going to do that? And then start building a network to support that. So if you haven't invested in private placements, start building out a sponsor network. I mean, Adam, you and I both know people who typically only invest with one sponsor. And while I admire their dedication to that one person, I also think that's pretty risky. There's a lot of concentration risk. So even if you are very experienced in this space and have invested with a lot of deals, you always want to be growing your network, always trying to identify new sponsors, new folks that you could potentially invest with, just from a diversification and kind of a risk management standpoint. So it's definitely big to be built, or it's definitely important to be building that network.
One thing that comes to mind on that, and actually Bob Frazier said this to me, and actually me and Wes when we were in Breckenridge, he said, if let's just say you had $1 million to deploy, like let's say you had $1 million portfolio in a stock account, and you said, this is the dumbest thing I've ever done, I want to move it, right? I'm not saying it's dumb, but I'm just saying, like, that's your opinion. We're moving it, we're done, we're out of here, right? And his point was that you shouldn't do it all at once. And I've seen a lot of people in the last 5 years deploy large amounts of money. And with the experience I have now, and just from seeing it happen and watching it play out, I think they did it too quick. If you have $1 million to deploy, I think that should take 3 years. Unless, and that's your, I'm saying, like, sale of a business, you made $1 million. That's now your net worth, right? That should take 3 years. Now, if you have a $10 million net worth, maybe it's $2 million a year you're deploying. But if you invest all of your money in the best deals this year, you're not going to be able to invest in the best deals next year. And so going into something liquid, or even, when we keep diving back to our credit fund, because it's the deal we always have open, but if you go look at the credit fund, you could put money in there, earn roughly 10% as our projections, and we've been meeting them. If you're making 10%, you could do that for 2 years. And after 2 years, you have the option to cash out, right? And so you could start pulling $50,000, $100,000 at a time. Some of our partners have even done that with Aspen's income fund, right? They put $1 million in, and then it's locked up for a year. But after that, as they wanted to buy stuff, they've pulled it out. And as they get cash flow, they put it back in. And it's really just a high yield savings account at that point.
No, I think that's a great point about if you are trying to deploy capital and not get caught up in this view of, okay, I've got to get all this deployed. Accept maybe a little bit of drag, right? Put it in treasuries. You're not going to be making a ton, but that's way better. It's way better to accept lower returns like that than to make either bad investments or subpar, or miss out on potential future opportunities simply because that cash was burning a hole in your pocket and you're like, I've got to deploy all of it now. I think that's an easy way to, make bad decisions. And if again, you take some time and find some partners and observe, or find some potential sponsors, observe them for a year or two, see how their deals perform, get on their list, understand how they communicate, and then invest. So definitely, completely agree, Adam. I think that's, you got to build your network, but don't feel like it all has to be done overnight. Well, that's kind of the 3-step action plan to the personal declaration of independence. I don't know, Adam, you got anything else to add here?
Not particularly. One thing that came to mind while you were talking, and we might have mentioned this on the previous episode, but I was talking to someone, I was at a table, and one person said, it was 3 of us. One person said, I've moved almost all of my 401k to cash. And the second person said, oh, you paid all the tax on that? I said, no, I just sold the positions inside Fidelity, but it's still in the IRA. It's cash. And so they didn't, and this was a while ago, so it was during a market decline. He's like, I haven't had to take that hit of the market decline. And the other person said, I didn't even know I could sell it, right, into cash. They knew they could trade to a different option, but they didn't think about it. Their IRAs invest in the stock market. So I think there's a point to that there's a lot of portfolio design. I think a lot of people don't want to get caught up in the minutia. They don't want to deal with designing the portfolio. To a certain extent, they want their financial advisor to do it. But I think, and this has been on my mind a lot recently, the problem only seems hard because there's so many pieces, right? I was installing a HVAC system in a house the other day, and it's overwhelming when you look at it, right? You've got ducts to run, you've got refrigerant lines due, you've got power to pull there, you've got to get all your vents hooked up, you got to get thermostat wires, you got to get the A coil put in the right spot, you've got to get your condenser outside, you got to put the right amount of refrigerant in. I mean, there's all these things that have to happen. The first time I did it, it was pretty overwhelming. Like, even the ductwork design alone is overwhelming. But when you start to break it into smaller pieces, right? Okay, this is a bathroom. It doesn't need a whole lot of air, right? It needs a 6-inch duct, right? And I think if you think of portfolio design in the same way, right? Like, I got $1 million. I need $200,000 at any given time. Okay, well then that's liquid, right? So, well, now I'm not having to design the whole portfolio. I just need to figure out what's liquid, right? What are my liquid options? Okay, well that stays there. Okay, and then I need something that's gonna be great 20 years from now. Okay, well how much can be great 20 years from now? Oh, 100 grand. Okay, well then what are my options that's for something that's great 100 or 10 years from now? And building those pieces together, I think is kind of where my mind went there. I don't know, was that too much of a tangent?
No. I think it's good. I mean, I think it goes back to, again, knowing what you're moving toward in the action plan to get there, right? Like if you don't, what's the saying? If you don't set a target, you'll hit it every time, or something like that. Or if you don't.
Well, the second part to that is that the action plan can be broken into much smaller pieces, right? Don't do the analysis paralysis. Just start the little steps, right? And I think the part that really kind of what maybe I was thinking about there with the turning the IRA into cash, they should have at least put it back into T-bills, right? Like you should have made some yield on it. Because you could, that's 30-day liquidity, right? There's no, unless you're planning to, I don't think you're selling an IRA to bounce it back in a week later. You're not day trading this account. So that being what it is, 30 days is probably plenty of liquidity for you to decide when you're going to buy something.
Yeah, for sure. No, it's good stuff. All right. Well, I'm sure everyone else, like we said earlier, has better stuff to do than listen to us ramble on here on the 4th of July. So, Adam, unless you got anything else, we'll get on out of here.
No, that's it.
All right. Well, again, thank you for joining us, especially here on a holiday and the holiday weekend, whenever you're listening to us. Happy birthday, America. We're starting, what is this? We're starting the 250 this year, right? Like this is the kickoff to the 250-year celebration.
Isn't Trump doing like a world fair nationally?
Yeah, it's supposed to be like a year-long celebration for the next year. Starts today.
I hope it's going to be awesome.
That is super exciting. All right, well, we appreciate you joining. Hope you stay safe. Don't blow your finger off with a firecracker or something like that. But we look so that you can listen to us the next time, and we look forward to you joining us on the next one. Just remember, where freedom leads, real wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.